Hello and welcome back to Dukascopy TV. Now, in a week where the euro has sunk and gold prices continue to soar, some organisations believe that gold could be preferable to the doomed paper currencies. One such organisation is Paris-based Riskelia, and I'm joined now by Armand Castiel to discuss this further. Armand, thank you very much for coming in today.
Good morning, Natalie. Yes.
Now, I understand that Riskelia is bullish on gold over the paper currencies. Can you explain the strategy to our viewers a little bit more?
Yes. First of all, we cannot forget that there is a gold constellation, not just the gold. There is the gold, the platinum, the silver, the miners, the gold miners, and some currencies very linked to gold. All this constellation is bullish. Why is bullish? Obviously, as everybody knows, everything started with the quantitative easing in the US, the first one, almost 3 years ago. And it started again for the second one. We see it as well with the European quantitative easing, the LTRO, and again now. And all this in a global trend. We are long gold versus all currencies as well for two more reasons. The first reason is all the currencies seems to be manipulated. The first one is the dollar. The dollar is manipulated, or is looked to be manipulated. We can speak as well from the real, the Brazilian real, they want to not to break the two real for $1. We can see in Swissy, in Norway and Sweden, all these currencies seems manipulated. And the only currency you cannot manipulate it is the gold. So this is the second reason. So quantitative easing, manipulation. And the third reason, and this is, we can see that gold is now a diversification asset, a real one. And what we saw last year is when equity sunk, okay, go lower, the gold is a safe haven. And on the opposite, even when equities are up or very up, gold is as well very up. So this is the three main reasons why we like gold.
But with gold prices expected to continue their rally, is there not the concern of a bubble for investors?
We at Riskelia have developed a tool called a bubble for any asset class, any liquid asset class, obviously. And we were using a kind of sharp ratio of the trend. Okay, if a trend is too nice or too strong, too quickly, then yes, we can see a bubble starting. In gold, we don't have bubbles. Or perhaps the only bubble we have was gold versus Indian rupee. If you go to gold versus euro, gold versus gold, gold versus Swissy, versus yen, we don't see bubbles. All our trends are positive, very positive. The most positive, or the main positive, is the euro, the gold versus euro. And if you see back the performance of that trade, I think it was one of the best. So we don't see any bubble today, yet. I'm not saying that we're not going to see one, but for the moment, at the level we speak, at what happened this last few months, we don't see any bubble yet in the gold.
It appears that the central banks are kind of agreeing with you as well. You've got the US, Germany particularly, their central bank foreign currency reserves have huge stockpiles of gold compared with, say, the BRIC nations, for example, who still maintain paper currencies. Why is there this divergence?
Well, again, we don't think it's a divergence. It's a state. It is what it is from history. Modern countries or developed countries, let's say, used to have gold before the monetary policy change in world. And before this crisis, we see this since 5 years, gold was not seen as a diversification asset, okay, or a safe haven asset. Since 5 years, we see, we understand everybody, not only the emerging countries, but as well the developed countries, that gold is a safe haven. You must have gold in your reserve, you must have gold in your portfolio. And in fact, emerging markets have grown their asset in gold. And in fact, one of the main drivers of this trend in gold was started by emerging market. And I don't want to imagine what's going to happen to gold if emerging countries push the move more, okay, to buy more gold.
What do you think could happen?
Yes, definitely could happen. If we see more and more quantitative easing, more and more printing money. Why you should have in your reserve dollars, for example. Why you should have even euro, even if the euro is not yet a real quantitative easing, definitely.
So Armand, if in Riskelia's views the paper currencies really are doomed, which are the worst at present? And specifically, if an investor does wish to keep their money in currencies, where would you advise them to put their investment?
Okay. As I said before, many currencies are manipulated, so it's a very difficult decision to invest in those currencies. We like currencies that are still commodity driven, and one of the main one would be the Canada, the CAD, and the Mexican. We don't see yet over there manipulation. So for us, those currencies are, let's say, one of the top two we like to invest as a currency. Now, on those currency, you ask me which investment, right? Well, we like equities on those countries. We like equities and corporate bonds on those equities. But the main problem is, first of all, which currency you want to invest. And which currency you want to invest are currencies who are not manipulated for the moment, obviously.
Armand, thank you so much for coming in today.